being more reflective before being so reactionary. Whereas when we were building, it was you have to be reactionary all the time. It's just the pace at which you're moving and growing. So it's now being more reflective.
Today's show is sponsored by Enigma Elements. As filmmakers, we're always looking for ways to level up production value of our projects and speed up our workflow. This is why I created Enigma Elements, your one-stop shop for film grains, color grading LUTs, vintage analog textures like VHS and CRT images, smoke, fog textures, DaVinci Resolve presets, and much more. After working as an editor, colorist, post, and VFX supervisor for almost 30 years, I know what film creatives need to level up their projects. Check out EnigmaElements.com and use the coupon code IFH10 to get 10% off your order. I'll be adding new elements all the time. Again, that's Enigma, ENIGMA, elements.com. I'd like to welcome to the show Matt Helderman. How you doing, man?
I'm good. How are you?
Good, my friend. Good. Thank you so much for spending the time and demystifying finance and the film business for us. So before we get into it, man, how did you get started in the business? Because it is a unique story. It's something about the New York Stock Exchange was in there somewhere along the line I read.
Yeah, so I grew up back east in Connecticut. Families in the private equity and the hedge fund world. My dad had started with a group of partners a fund when he was about my age, and so grew up in and around that environment. And like you mentioned, I got to have some pretty cool internships, both some pretty well-known hedge funds and private equity places, as well as being a runner on the stock exchange when that was still a thing. And recognized that there were aspects of finance that I liked, and there were aspects of that sort of level of business that I liked, but ultimately where that industry was going was not really suited for what I wanted to do with my life. And I loved content growing up. But from a consumer and audience perspective more than from a filmmaking perspective. So I was obsessed with film history and filmmakers and film theory, and in college got into European film and the history of cinema and cinema studies. And then in undergrad, I sort of got inspired by this digital boom that was happening with the red camera technology and Final Cut being sort of available to edit and export content from a MacBook Pro. And all of a sudden it really leveled the playing field of how you could make and distribute content. So I made a feature when I was an undergrad and came out to LA to sell that during my senior year spring break. It was my first trip out to Los Angeles, and sort of had the veil lifted on this huge industry that's out here with sales companies and agencies and distributors, and learned the business from the ground up. And so Buffalo 8 had been launched that prior year to produce that picture, and we brought that business out here right when we graduated, and grew it, and built out the management side, the post-production side, and then launched BondIt in end of 2013, early 2014, and that momentum just snowballed across both of the businesses. And it really is sort of taking the applications of finance, both corporate finance and single project financing, as well as a true love and an understanding of content. Because at Buffalo 8, we had produced more than 40 features before we even launched BondIt. And so we had a real understanding of the cash flow need, and our understanding that the banks and certainly institutional financiers like traditional hedge funds weren't really able to support, let's call it, content below $6-7 million, which is the vast majority of independent film. And so we built a business that could support that content.
Now, can you explain specifically, because you do a lot, it sounds like you do a lot. So can you explain to the audience specifically like what you do on a daily basis and what your kind of like what your job is, so they can have a better idea of what you do?
Yeah. I wish that every day had some form of consistency, but we do, on the financing side, we finance almost 60 single picture projects a year. And so that ranges from very small, low budget content where we have a handful of companies that we finance that are producing television content. So $500,000 to $1 million, either episodic or TV movies, and they might do 5 or 10 of those a year. Then we have clients that are making, I'd call them middle market independent films, the $2 to $4 million type budgets. And we're not only originating those deals and structuring those deals, but closing those deals. And the closings are very taxing. I like to joke that I had hair when I started these businesses. And it's partially a joke, but it's also partially honest, which is the closings end up taking the majority of our time. We see across the slate probably close to 1,000 project submissions a year, and those are projects that have cast, directors all on board, sales already executed, a distributor and the domestic component sometimes already buttoned up, and we're just coming in and effectively acting as the financial support for those pictures. And so a regular day looks like sifting through a slog of both active closings. At any given time, we probably have 4 to 6 closings that are term sheet out or term sheet signed. Then you have obviously the active portfolio, which at any given time is about 40 pictures. So you're tracking what's going on with the pictures you funded. Where are they in the collection cycle? What are the issues that need to be worked through in the delivery process? A distributor is rejecting delivery in this territory. There's sort of painstaking brutality that is managing a portfolio of that size. And then there's also the Buffalo 8 side, which is producing content. So you're checking in on projects that different set of team members day to day than the BondIt team. How are things going on the active productions, both short form and long form? And then I think maybe you know as well, BondIt also owns ABS Payroll, so a 30-year-old entertainment payroll company, which is processing payroll for 700 films a year. It's a team of about 30 or so. So it's my job is checking in and basically putting out fires across each of those areas.
It sounds intense, sir.
It's very intense. It's very intense.
It sounds intense. I'm exhausted just listening to you. I can only imagine what you're like. I always tell people when they ask me, like, I have twin girls. I'm like, I'm 25. Look what they've done to me. You must be like 15. Look what this business has done to you, sir.
That's exactly right.
I'm aging horribly.
Exactly right.
Now, I've always wondered about this because making money in the film business is almost an oxymoron in many ways, like jumbo shrimp or military intelligence. It's like multiple. It's like it's very difficult to do. So I always understand, like, hey, we're gonna go get a bunch of dentists to throw in $100,000, and make a movie. That model I understand. And I understand on the studio side when they're dealing with financial institutions and hedge funds and those kind of situations because they're the studios. But you live in a very weird place because you live in a independent, arguably low budget, though a lot of people think under 10 million isn't low budget, but it is in the grand scheme of what movies are made for. And you're able to do this successfully, and you've been able to grow your business. You're not doing 1 or 2 movies a year. You're doing 60 a year. Mm-hmm. So there has to be some sort of, I'm just curious on if, I don't know how much you can talk about the financial, world behind it, but like, how do you, obviously you have a track record. So, banks are going to do it, in institutions, hedge funds are going to trust you guys to be able to make these kind of financing choices. But I'm so fascinated about, returns and what is expected. And because, the film business is infamous for not making money. Do you group them together with like a group of 10 films and they kind of the bad ones, the good ones pay for the bad ones? How does it work specifically in your side, your corner of the industry?
Yeah, I would actually say I'll answer the question by sort of painting a picture that is oftentimes most helpful whenever someone wants to have this discussion, which is there are 3 models that effectively can work in, let's just call it, independent studio world, which I would say I know folks who do $1 million movies and they have great businesses doing that. And there are the folks that do sort of call it middle of the road, $5 million. Then there's this no man is $7 million to $15 million is a really hard place. 7 to 20 is a really hard place to make a movie, and we can talk about that. Mm-hmm. But ultimately, there are 3 models that can work. There's the Megan Ellison model, right? Your dad literally says, "Here's $200 million and go." And you have basically a business model to say, "Okay, I'm going to lose money for 7 to 10 years to build a brand, to build a library, and then the next 7 to 10 years are hopefully making that money back and then some." Taking a long view on a library approach. That's never been our model. Mm-hmm. Very, very different business. Then there's the business of, okay, let's come in and you call it dentists and doctors. I would say there's definitely sort of a single picture world where that 100% is a business. It's a really hard business for producers. I don't think it's sustainable. I think it, as an industry, will continue to be a very real thing, right? There's going to be 5,500 feature films made this year globally. Of that, less than 10% are going to have any theatrical footprint at all. So the vast majority are either one of two things. They're made for SVOD, made for TV titles, or more likely they're dentists, doctors throwing in capital that become sort of very expensive paperweights. And so we're not really the Annapurna model. We're not really the dentist doctor model. And then there's a third model, which is you're effectively reverse engineering the content to fit the market, which is really what we've been able to capitalize on. And when you say we have a track record, I mean, we've done over 300 single picture financings, and we've lost money on less than 4 of them. And the reason is that we're not taking theatrical, or I would even go further and call it just commercial performance risk, which is a really tough business. I would go so far as to say it's a really bad business.
I was about to
unless
say.
You have, unless you have, and here's the thing, I mean, if I had 10 times the capital that we have behind BondIt, maybe, like you're saying, you allocate some of it towards bigger, trying to hit triples and home runs. But BondIt today is you hit lots of doubles. And these are pieces of content that, from a structural perspective, the economics before you actually write the check. You know what your return is, that your risk is really coming down to, can the producers execute and deliver the film? Can the distributor that has signed up to buy the picture stay in business, which is a real risk in this environment? And can you do that enough times that you'll heavily outweigh any of the losses or issues that may arise? And we've done it enough times to know there's always going to be bumps. There's always going to be challenges. But ultimately, again, we don't take, I think about our portfolio. We've done 300 of these films. When BondIt in the early days, we were capitalized by investors that were backing the company. They weren't backing single projects. They were putting money into a fund, and we were lending that capital out against minimum guarantees and pre-sales and tax credits. And then about 3 years ago, we went out, we hired an investment bank to help us. At that point, we had a track record to help us go out and raise institutional money, which is insanely challenging. The administrative aspects of it and the reporting aspects of it on a go-forward basis are mind-numbing. It's equally as complex as filmmaking, except people don't want to hear excuses, and you've got to be even more on top of it. And we raised capital from a very large institution that has been around for 40 years, and they provide capital to every asset class. So lending against construction and real estate and automotive and invoice factoring. And they were able to really help us think about our business in a much more sophisticated way, especially because they can be very patient, right? They're a public company. They've got $400 million balance sheet. It's a very different business than a film financier. And so when we got that deal done, then we were able to be a little more flexible in saying, today we have a dozen or so clients that are sales companies, distributors, animation houses, visual effects companies that use BondIt almost like a bank to smooth out their cash flows, to finance their original productions, to borrow against their libraries. So all of a sudden you're effectively peeking under the hood of hundreds of these businesses, whether it's on the ABS side, whether it's on the BondIt side. And that has allowed us to, I'm answering your question in a very roundabout way, understand sort of the financial dynamics of how so many of these companies are either working or not working, and then apply that when a new opportunity comes through the door.
Very interesting. Now, in your experience, what is the biggest mistake filmmakers make when looking for financing? Because there are many.
You could write a book on it. Sure. I would say we had the number of filmmakers who reach out to us saying, "This is the next XYZ project."
Yes.
It's just wrong, and it's not to be arrogant or rude that maybe you could have written the greatest script in the world. Yeah. I won't say who exactly the name is. I'll just say a top literary agent at the largest agency, the most important agency in the world. We were at lunch with them recently, and they said, you could have the best screenplay in the whole world, and not one person gives a shit who can actually make a decision anymore. They don't care. It has to be package based. It has to be cast is on, director's on. Here's what the budget looks like. Here's the finance plan. Here's how we've mitigated it by bringing in this number of sales. Here's how much capital has been raised to sort of hit this threshold. That's a good presentation. A bad presentation is, this screenplay is amazing. Can you please have your team read it and get back to me in 48 hours? I need to go into production by this time frame because I have this actor who wants to do it, and his best friend is my best friend's cousin. And you hear that stuff 15 times a week, and you just know those filmmakers are going to have a really challenging time making that movie. And no matter how much you tell them that, they still want you to get on a phone call and basically just regurgitate. You can already lead them to on our website that sort of guides them through, here's what you need. They'd rather get on a phone call and try and convince you that, no, this is different. And I think that's the biggest mistake, is believing that the IP itself is somehow going to convince someone like us, who effectively are an institutional financier, to take risks. And I mean, we see Angelina Jolie projects, Charlize Theron projects, Edward Norton projects. It doesn't matter. You still have to pass on it if the deal doesn't make sense. We're not here to lose money. I'm not here to have just credits. I want to have a business that is sustainable and built for the long term. And I think filmmakers are so driven by making that movie. There's lots of producers, and I'm sure you know them too. They'll say anything to get a deal.
Yep.
And it becomes your job to filter both there's sort of two things, right? There's the passion of the filmmakers that hopefully they have good intentions from the outset when they believe the content is that good. I'd say that's mistake number one, is not building the elements when they make that initial presentation. And then the second biggest mistake is just how much this industry attracts people that are scam artists. Oh. And I think what ends up happening ultimately is you've got people that have good intentions, but the desperation of getting something made leads them to do bad things. And then once they've done that once or twice, it's a lot easier to tell someone a half truth or a quarter truth than it is to actually be honest. And that's a big part of our job, is dealing with people that are talking out of one side of their mouth today and another tomorrow. And that's really challenging. I
can only imagine what you have to deal with on a daily basis. The phone calls, the meetings with people. Because I mean, at every level of the business, there's people who are trying to scam you in many ways. Every level, from the screenwriter who's talking to a producer who's like, hey kid, sign this paper and I'll option it. Give me $1 and I'll option it for 10 years. And now you've basically lost that screenplay just because, there's multiple levels. But when you get to the world of money, and I've been in those meetings and I've sat in those things, and you sometimes have dumb money. I've seen dumb money, like, that will write $1 million check for a movie. For a first-time director. I've literally been in that room. I wasn't the director, unfortunately. But I've been in that room. So I can only imagine what you go through on a daily basis.
Yeah, it's crazy. It's crazy. Which we've tried to get better, especially over the years, at doing a few things. One being just listing out the exact criteria in a frequently asked questions section and just directing people to this. So instead of them wanting or trying to get me on a phone call or one of my team members on a phone call, it's, guys, you just have to follow this criteria and then we can really look at it. And then we've also tried to get really better at, there were days, and certainly even as recently as the last few months, where we've got 50 or 60 team meetings in a week that you're looking at new projects or you're sorting out portfolio issues. And it's like, that's just not sustainable. You've got to figure out a better system to filter these projects and also to deal with the projects when they have issues. So it's definitely a continuing learning process.
I can only imagine the egos that walk in those doors of yours, sir.
There's a lot.
There is a lot.
A lot of maniacs.
How many times have you had someone say, well, this is going to win the Oscar?
So many times. Or it's even better when the Oscars get announced like they did this morning. Yeah. Then you've got people that reach out and say, see, I told you my film is exactly like this. And it just got nominated for an Oscar. And it's like, man, people will go to crazy lengths to justify why their deal is the best deal.
Don't you love when you read a business plan and it's like a horror movie and then they bust out like Paranormal Activity, Blair Witch?
Yeah, it's only Blumhouse. It's like, I'm basically just going to make Jason Blum's most successful movies. That's all I'm going to do.
Exactly. Everything's going to hit exactly the way that's going to happen.
Correct.
Or even worse, they'll bust out like things like, Easy Rider.
Oh, yeah.
They'll bust things out from the 70s and the 80s that were independent hits.
Yes.
Crazy. Plan 9 from Outer Space, man. Ed Wood, he was on look at that. How much money has that made? Over the years. Now, what are some of the biggest myths you come across or would you like to dismiss regarding getting money for your independent film? Because a lot of filmmakers have these ideas, like many of the things we just were joking about, like putting down examples of films like this is just like The Matrix meets Marvel. Like, dude, like, and you have it's a $50,000 budget. Like, come on.
Yeah.
What are some of those myths?
I would say, definitely. I think there's a few of them. The first is, I'll just blanket it, which is what you've just said, which are people using comps that are not only irrelevant, it also goes into your question about mistakes that filmmakers make. They haven't done the research to understand even the business they're trying to operate in the sense that, okay, Blum is a perfect example. The number of people using Blum's business model as a reference, he spent 10 years producing content independently with really close colleagues before he even had the deal with Universal. He spent 8 of those years negotiating that deal with Universal. He negotiated a deal with Universal that allows them to release these films on a studio level 1,500 screen minimum with a P&A commitment to be supported at 15 million or above on every picture. That cannot happen again that way. Someone will be as successful again. Someone will do something and build an independent studio in a niche market again, but it won't happen that way. And so by saying, oh, my movie is going to be Paranormal Activity, no, it's not, because even movies that were successful 2 years ago, the movies that are going to be this year are going to look completely different because the model's changing so much. I mean, Roma is a perfect example. That movie should, by all intents and purposes, that movie should be financed by a single private investor, not a tech company, right? If you were trying to write the business model for Roma, you would not have written the model that ended up making the film successful. So it's dispelling the belief that what was successful will be successful, especially in today's age where technology is changing how everything's happening in our business. And filmmakers just want to say, here are the numbers, here's the raw data. The second piece is going further into that raw data and saying, okay, so a movie makes $100 million. I don't think you understand how little of that actually goes back to the pool that you think it does, in the sense that you have so many costs in between the gross and the net that you're not taking into account. And most producers we know don't even understand this, especially producers that are just trying to slingshot deals and, like you said, sell you on stats that are not truthful. And I'd say the biggest myth is reading the Monday morning box office gross numbers and having your jaw drop at some of the numbers, because at the end of the day, cut it all in half. That's what comes back, and then cut it all in half again after taxes, and then hold that against the actual cost of a budget and see if it mattered, right? You've got off the top P&A costs, exhibitor costs, distributor costs. Then you have the actual collection account costs. Then you have latency, because a lot of those costs are going to come in late. So many of them are going to be written off as bad debt. Then you've got to have it come back into the waterfall, and you've got a senior lender on almost every movie before the equity even recoups. Then you've got the senior lender's premium before the equity even starts to recoup. Then maybe mezz, then maybe equity. And then at that point, the equity has to start paying taxes. So what are you, again, an understanding of that waterfall to me is one of the biggest myths of what Hollywood has been able to really do a great job, just like they do with the rest of their product, sell a sexy story as opposed to sell the honest reality of what the economic waterfall looks like. And really smart film financiers get this, and they use it to their advantage. But I think that's probably the biggest myth to me is box office.
So Hollywood is very good at selling that sizzle, but not so much on the steak.
Big time.
Without question.
Big time.
So I want to touch a little bit about the box office myth, because, people say, oh, that movie made $800 million. I'm like, how much did it cost? How long did it take out there? What's the P&A budget that they had on it? So a movie like Justice League, I always beat up Justice League because it deserves to be beat up. But a movie like Justice League that cost upwards of over $200 million on a production standpoint, then at least $200 million on P&A. Would you agree with that? I mean, because it was everywhere. You couldn't even move without seeing a poster for that damn thing. So now you have a $400 million plus budget, not to mention there's probably a bunch of other expenses I didn't see. The movie pulled in $780, $800, I mean, something like that, domestically, let's say. Yep. So if it pulled in $800 million, let's do your math. Cut it in half, then cut that in half, and it pretty much was a loss.
Yeah, and I think what people often forget is taking taking the gross number and applying it just to one set of economics isn't how it works. And I think the easiest way to think about this is why it's so important for a film to open up so well weekend 1, weekend 2, weekend 3, is that the exhibitor takes the lowest percentage of your gross in those 3 weekends. Mm-hmm. And even easier, or said another way, is you think about the business of owning a movie theater. You're effectively a landlord, and you have a new tenant who's willing to come in each weekend and take that space and likely pay you more because more people are going to see it. So your split is going to be larger. You're going to make more money by bringing in new movies. So films that stay in theaters longer, unless they're crushing it, they're just paying a larger percentage on a winding down tail of ticket revenues. So when you think about Justice League, that movie, let's say it stayed in theaters for 8 weeks. By week 4, they are truly effectively at split with distribution costs and exhibitor costs. So now you're literally only able to justify staying in if the number of folks continuing to see the movie are outpacing the amount of economics that are being eaten away by the distributor, the exhibitor, again, the collection costs. A lot of these theaters pay really, really late, and then they find every excuse in the world not to pay. So I think there's so much more behind that than just, again, the box office numbers people are obsessed with, but that's not the whole story. For sure.
And generally, I mean, I've heard different splits on opening weekends. I've heard a 30-70. I've heard a 80-20, depending. Like, I remember when there's like big Marvel movies, like that is the ticket. We all know it's going to make $1 billion, and Disney will like flex its muscle. I'm like, you want it, it's going to be an 80-20 for the first weekend, as opposed to the standard 70-30. And then it just every week it'll start going down to a 50-50.
Yeah.
And how low does that go in your experience?
The lowest I've ever seen is 50-50.
50-50 is generally the lowest it'll go. But at that point, though, it's not making. It's basically
no, because the exhibitor doesn't have the same. I mean, look, that's a terrible, tough business as well. But the exhibitors don't have. The exhibitors don't have the same overhead structure. They've got their own issues to deal with, but they don't have. They also need to be recouping P&A. They also need to be recouping the actual production costs. They need to be recouping. Oftentimes, especially on those big pictures, there's huge bank loans that the interest is taken, right? And the film is owned by the bank until that loan is paid off. So, I mean, Disney's a different story. Disney's effectively financing internally and then with JP Morgan. But that is again, one of the biggest myths to me is filmmakers not studying that, understanding that, and saying, okay, well then how do I operate in this environment where maybe it's a better economic model to make a smaller picture that has a bigger footprint with international sales, a domestic distribution deal that might not even have a theatrical component. I would say that's one of the biggest mistakes we see filmmakers make is only wanting to make a movie if it has a theatrical footprint. That's just not justifiable anymore in the world we live in.
Right, and that is another thing that I'd love to talk to you about, theatrical, because I mean, look, theatrical is the dream, especially for a certain generation. I'm not sure as much for the generation coming up behind us that theatrical is going to be that big of a thing. But for us, we didn't have anything else when we were growing up, and theatrical is like the gold standard. Yeah. For if you made it into a theater, you are a filmmaker. Right. Where now it's like you make it on Netflix, you're a filmmaker in many circles. What kind of in your business model, having budgets of 10 million, let's say 10 million and below, how important is theatrical, and where is where are you looking for the revenue to come in from more than not?
Yep, it's not important to us at all. It's not that we dislike it. It's not that we dismiss deals that have either theatrical ambitions or a theatrical component built in by the time they reach us, and it's almost a certainty. What we do care about more than anything is who's selling the film internationally. Okay. What sales have they executed, both in which territories and to which buyers in those territories? And then what does the domestic strategy look like? More often than not, the domestic strategy is some form of a day and date with SVOD and with theatrical, maybe 5 to 10 city theatrical for certainly these middle market $5 to $10 million movies. But I think people, again, miss the rationale behind why that theatrical is often even happening, which is oftentimes it's only there as a tool to drive a Netflix deal. And what I mean by that is Netflix has a structure in place with many distributors that if they've opened up a film in X number of cities theatrically, Netflix takes it at a different level of their rate card. So Netflix has a rate card that is based on a number of things, and they've obviously massaged it over the years, but it can be based on percentage of box office gross, which it was very famously for someone like Relativity or even someone like Disney.
Mm-hmm.
So Netflix is literally paying X amount against box office gross. Then there can be a structure in place that says if you, as an independent distribution company, have opened up a film in 15 to 20 of the major markets, we will take it for $1 million guaranteed. That is usually the rationale on why distributors are playing the SVOD game.
We'll be right back after a word from our sponsor.
As filmmakers, we're always looking for ways to level up production value of our projects and speed up our workflow. This is why I created Enigma Elements, your one-stop shop for film grains, color grading LUTs, vintage analog textures like VHS and CRT images, smoke, fog textures, DaVinci Resolve presets, and much more. Check out enigmaelements.com and use the coupon code IFH10 to get 10% off your order.
And now back to the show.
It's not knowing that they're not going to drive or attract that much of the economics from those theatrical markets, but ultimately that it's going to drive a better underlying SVOD deal. So what BondIt is doing is we're coming in and we're providing capital against, in that example, just the Netflix piece and whatever the guarantee was from the domestic distribution component in the other windows. So beyond the SVOD window, whether that's theatrical, whether it's traditional television, pay cable, those windows have assignable rights and assignable values. And a great distributor and a good producer will pre-sell those, or at least a portion of those, to make their film, to not have to go out and try and beg, borrow, and steal from doctors and dentists. Some of the best producers we see don't raise any equity anymore. They make their films completely on negative pickup structures using that kind of a model where all of these windows are being pre-monetized before they go into production. And I think that's going to become even a bigger piece where the business is going to go. And that's why we like the seat that we sit in, which is be selective. We'll say no to deals that we believe have too much risk because we have a long-term belief that film content, whether that's now television product that's being produced independently, that we see a ton of, whether it's digital content creators. We have clients that are producing just content for YouTube or Instagram or Facebook Watch. The model is the same. Those platforms are pre-licensing, pre-buying that content, and we're coming in and financing it. We have a very real belief that there's going to be more content, and I think probably you feel the same way. There's going to be more content than ever before in the coming years, especially as you've got these huge players like Netflix having these land grabs to acquire more and more. So to us, theatrical is a nice component that can work for a certain kind of movie that I wouldn't want to bet on theatrical risk. And that's why we don't do P&A. We don't do first out against theatrical waterfall. We will secure against the theatrical waterfall, but only in the instances where we have the other windows as well as firm collateral, because we see movies with projections that are incredibly aggressive, and you look at them and say, oh, maybe this makes sense. And look, we've seen, I'm not going to name the exact names of the film, but you see Tom Cruise and Brad Pitt level movies, people are coming to us asking for P&A help or even production help from a financing standpoint. You take a hard look at it and you think, okay, how is this going to do? If we had done those deals, you probably lose on half and make money on half, but you break even at the end of the day. And those are probably two of the biggest movie stars in the world. And so it's hard to justify the lower budget theatrical play when the market, even for the higher name talent, is so volatile. And I'd even just say it's completely uncertain. And it's a monkey throwing a dart with a blindfold. You just can't consistently pick winners. It's not possible.
I mean, and that brings me to another question in regards to star power. I mean, in the olden days, stars meant really meant something. Like, you put Bruce Willis, Tom Cruise, Brad Pitt, it's a guaranteed 20 million opening. It's a guaranteed 30 million opening. Yeah. In today's world, that's not the case at all. There's very few, if I can even The Rock, who's one of the biggest movie stars in the world, he guarantees a certain amount, but it's not like it used to be. I mean, I remember when Tom Cruise opened the movie, or Tom Hanks or Brad Pitt or Will Smith, those like, it was an automatic. People would just show up. Where in today's world, it's not that. I mean, the only things that are generally winners every time are the Marvel movies, and they're very smart about how they do it. And even Disney, has their, Lone Rangers, their, John Carter from Mars. They have those occasionally, but they're so damn big. they could take those hits. They could absorb it and keep smiling. All they got to do is sell a couple more tickets at Disneyland. It'll be okay.
Correct.
So in your opinion, first of all, how do you guys at Buffalo 8 actually assess projects for financing? I'm sure that's a question a lot of filmmakers would like to know about.
Yep. So I think what's most important is remembering two completely different businesses. Buffalo 8 is production, post-production, management focused.
Okay.
The only projects we're really looking for on that side are projects that can fit. We have a nice overall relationship with places like Netflix and Amazon and Hulu, where we've done original content deals with them. Mm-hmm. Our goal going forward is almost exclusively to make content with SVOD platforms. It's much cleaner. When it's a yes, it's a much safer and secure yes than it is with independent financing. And it's also the future. And I just am a huge believer in we should just be putting all of our efforts behind building content specifically for these partners that we've built over the years. So the kind of content Buffalo 8's looking for is packaged content. And that can be one of three things or two or three of three things. And I think these are the underlying principles that will continue to drive this business no matter what happens. And it's IP, it's casts, or let's just call it more broadly talent. It can be director, it can be writer, it can be cast, and it's IP. So it's IP, capital, and I'm a huge believer in that those are the three things. There has to be one of them. You either have to have some capital attached. The IP itself needs to be a huge, meaningful piece of IP by the time it comes to us, or you've got to have you have to have one of those pieces assembled. It's too challenging otherwise to move the ball up the field. And regardless, we've had huge pieces of intellectual property. I mean, I'm talking Twilight Zone. I'm talking Spike Lee. I mean, I'm talking huge pieces, and it's still challenging. So Buffalo 8 looks exclusively for projects that have a piece that we can then move and shepherd into, again, sort of the SVOD arena. At BondIt, we're looking. Well, I'll be very cut and dry first, and then I'll back it up with a little more empathy. We're looking for projects that have senior collateral. It can be a tax credit, it can be pre-sales, it can be a bridge loan, it can be a negative pickup, it can be a media company looking to borrow against a library, it can be a media company looking to buy another company, and we're coming in and providing the capital for the acquisition. Backing that out, obviously, we then care about the team involved and the project to make sure that not only do we believe that the team can execute the project, but that the project isn't egregious, however we want to apply that term. And also, again, is the element that we're calling collateral actually secured? The number of producers that will call and say, I've got this movie, we really want you guys to finance the tax credit. Can we start closing? And you look at it and you say, we don't have any other financing. There's no tax credit until the rest of your financing is closed. Or you'll have a filmmaker come to you and say, we've got all of these pre-sales, want you to come in and do the pre-sales loan. And you look at the company that's doing the pre-sales and they've never sold a movie before in their life and they don't have a website. Right? We're not doing that. And then the number of filmmakers who say, I want you to come in and do a bridge loan. You say, okay, well, what am I bridging? But you're bridging a guy that I met at a dinner party who said that he might want to finance my movie. So that's not a bridge loan. That's just called losing money. We won't be doing that. So it's about assessing the package. And then once you actually have received the package, assessing that the package is actually a verifiable opportunity versus a filmmaker, again, likely being well-intentioned, but just not being fully informed on what a company like us needs.
Now, I want to ask you, what does a filmmaker need legally to ask for money? Because there's so many, not from you, but just as a general statement, other than, look, if it's mom and dad giving you a check, it's different. But if you're going outside of friends and family, what do you legally need to have to go out and raise money for a feature film in the U.S.? Yeah,
it's a great question. And like you said, it really depends how you're going out. And the term you'll hear is solicit. There are solicitation limitations in regards to how you can go out and raise capital. You ultimately need a pretty serious document from an attorney if you're going out and trying to raise capital. That document, it can take the form of 5 pages. It can take the form of We've seen 200-page.
Is that a business plan or is that a PPM? What is that exactly?
It's a PPM, but a PPM generally that we see is now encompassing all of the aspects of the business plan.
And can you tell people what a PPM is?
Yeah, it's a private placement memorandum. So it literally stands for going out and raising private capital. So you're soliciting an investor, whether that's an individual, whether it's a fund, whether it's a broker, and you're literally soliciting them to put a private placement into an entity, an LLC or an Inc. or a Corp, whatever entity you've set up to own the intellectual property and the underlying economic structure of the picture. The investor is buying a piece of that. And to sell a security, which is ultimately what you're doing, you need to have your ducks in a row, because there are many tripwires in regards to financial securities. So a PPM we see being the most often used tool, but I'd go, and I'm sure you've seen the same thing, two sides of the market. Really low budget producers, they just slingshot emails, dozens of them all over the place. Every financier, we'll get them at our Buffalo 8 emails, we'll get them at our BondIt emails, we'll get them at our ABS emails. Like this filmmaker, this group is just slingshotting 50 sort of spray and pray approach to raise money. That's probably not a good idea. I don't know many people getting movies financed that way. So that's one side of the market where there's not a ton of organization. Then there's the high end of the market where you've got big, well-known producers. I'll just get a phone call and they'll just say, we just pre-sold this for $10 million to Lionsgate. Universal's going to take the rest of the world for $5 million. There's going to be a $4 million tax credit in Georgia. Does BondIt want to do it? You say, yeah. And then you get a finance plan that is sent via email and you're off to the races. There's no PPM. There's no incredible documentation. It took those producers, it's kind of like that great story about Picasso dabbling on a napkin in a cafe towards the end of his life, and he was drawing and doodling, and he crumbled the napkin up and got ready to throw it away. And a woman said, "Oh, I want that napkin." And he said, "Oh, I'll sell it to you." And she said, "For how much?" And he said, "For $100,000." And she said, "But it took me 10 seconds." And he said, "No, it didn't. It took me 76 years and 10 seconds." And that's the same sort of analogy I see with high-level producers is they are able to operate like that because they navigated all of the landmines of this business and got to that position of being able to make a phone call and get a deal done. So I see two polar opposite sides. And the reason I think we're willing to really play on both is we have a lot of filmmakers that started on the lower side of the market that have now become really, really great producers, Indie Spirit Award winners, producers that are climbing up the ladder to go do Golden Globe films. And we know that has to be the way we think about investing in our business and investing in the community of earlier stage content creators that have to sort of get through, again, that analogy of surviving the landmines of this business. But I would say it's hire a low cost entertainment attorney. It's a template document that they should be able to shoot out for you pretty quickly, and then just go out and I think building that initial network of investors that believe in the filmmaker or the company, it's critical. It was what we spent the majority of our time doing as we were building. And I know it's not necessarily the most fun thing in the world or glamorous, but it's the only way to build a real sustainable business in entertainment.
I find that filmmakers generally, and I've met and spoken to thousands of them over the course of my career, that a lot of them just don't want to do this kind of work. They just want to be artists, and they don't want to think about the business, and they don't want to think about all the work that goes into building these relationships that you can literally just call up. Hey, Matt, I'm just going to call you up, and I'm like, hey, I pre-sold this to Lionsgate for $10 million. I got a $5 million. Let's make a deal. That took a while. I mean, you're not going to just accept that from anybody. If I called you and said that, you were going to go, well, Alex never made a $10 million movie. This doesn't make a whole lot of sense. Let me make a few phone calls to my friends at Lionsgate at Universal to see if he's actually telling the truth. But it takes time to build those kind of relationships up. And that's things that filmmakers don't get, that this is a business. And I always use this line that I stole from a producer friend of mine, Suzanne Lyons, that the word show and the word business, the word business has twice as many letters as the word show, and there's a reason for that. Do you see that as well? That there's just this people that just they want the quick, easy, they want that sizzle that Hollywood has sold them, but they're not willing to cook the steak.
Yeah, no, of course. There's not to use another quote, but if you're familiar with who Robert Mondavi is, a really famous winemaker in Napa, and toward the end of his life, they were basically reflecting on this huge, crazy career he built and launched effectively an area of the United States into one of the most important wine industries in the world. And they asked him, they said, well, it took a long time. And he said, well, it took a lifetime. But what else was I going to do? This is what I love. This is what I was always going to do here. And I think if you can think about filmmaking in that perspective, I think the way I've always looked at it is if you get past the unfortunate reality of how the sausage is made with a lot of aspects of this business and still love it, you're good. Like you can stick around, but otherwise it'll beat you up and tear you down. You have to be willing and able to put in a lot of hours outside of just being creative. The best producers and even the best creators we know, they now invest time, and some of the best directors we know are now on closing calls. They're wanting to join and understand what's going on with the financials of this film, what's going on with how the financiers are thinking about this project. What does that give me insight into the rest of the market? And I'm talking big filmmakers, right? The kind of folks that don't necessarily need to do that, but they're incredibly curious. And I think that curiosity ends up just being a really big driving force.
The more information you have, the more dangerous you are as a filmmaker. I always tell people, you if you can have a conversation with someone like yourself and at the level, at least, or close to the level of what your expertise is, that opens up a lot of doors that would be closed to filmmakers in many ways. Would you agree with that?
Totally agree. And I think from a financier's perspective or executive producer's perspective, you have to be willing and able and wanting to do vice versa, right? You have to, we've made it a priority to go visit at least one set every single month. There were years when we were building these companies where you have 30 movies in production in California at any given time. And you've got to be able to have that personal touch as well to know. And look, I came up, as I sort of said, from building Buffalo 8 and being on the ground, building and making lower budget content, which is brutally challenging, from the seat of a PA to a coordinator to a production manager to a line producer, then getting pulled into a company that was producing a ton of international pre-sale driven content. So I learned the business from, if a producer calls me and says, hey, there's this issue, I get it. We've gone through it on the other side of the business, and the Buffalo 8 team continues to go through it with projects we make. That to us is the biggest differentiator between the way we approach the market and almost anyone else. Is we've got sustainable long-term capital, and we've got a team that likes and appreciates content, not only from an audience perspective and a creative perspective, but because we get how brutally hard it is to do it. And you've got to be willing and able to be flexible when you're a financier because of that. Just like a filmmaker, like you said, should invest the time to learn some of the nuances. And even if it's just a cursory understanding of where the business is going, it'll inform you 1,000 times better when you're out there trying to raise money.
Now, I want to ask you about Netflix and specifically because that is the company of the day. They've come out and they've basically become a major studio in a short amount of time. I mean, they are bigger and they're spending more money than most of the big major traditional studios in many ways. How have they changed the movie business landscape, in your opinion, in the sense of how business is done? I mean, they literally upended this entire industry. But I want to see from your point of view how you feel that have they changed the game?
Yeah, they've changed the game in so many ways, and I would say there's a analogy that CAA has used multiple times, which is Netflix doesn't change like an entertainment company; it iterates like a tech company. And so, keeping up with the change of those iterations, a tech company launches a piece of software, and then there's 2.1 and 2.2. They're literally updating the software for bugs. Netflix does that with their business model. And in an industry where things have operated pretty much the same way for
hundreds of
years,
exactly. Tens of hundreds, yeah.
Yes. So what do we see? I think the biggest and most obvious that is on everyone's tongue is they've tapped into the reality that direct-to-consumer is the future. And it is the future now that really smart and agile companies like Disney, who are unbelievably well-run, arguably more well-run, will figure it out, will catch up, will build their own product. Netflix has a head start, no doubt about it. so I think direct to consumer, that has changed a lot. We see a number of, even maybe I'm sure you recall when Uber came out, everyone and their mother was launching a business that was Uber of that, Uber of eating, Uber of walking dogs, Uber of car washes.
Sure.
Now you have everyone launching the Netflix of that. We've got the Netflix of African American content, the Netflix of Christian content, the Netflix of children's content, the Netflix of animation.
I have the Netflix of filmmaking content, with IFH TV as a streaming service. So, yes, and I position it that way. I'm like, I am the Netflix, because that's something that everybody gets right away when you say that.
Correct. So we see a ton of those platforms popping up, which has led to great opportunity for us, because then we become the financing partner for, I can't necessarily name the name of the companies. I'm sure you could research them, but companies that are Netflix for African American content, and they've got 700,000 subscribers that pay $6.99 a month. That's a real business.
Oh yeah.
You can finance some content. You can build a little platform. You can build a library and build a little studio. Same thing with the faith-based content. Yeah. So that has been a big opportunity that the sort of Netflix effect has created for us.
Mm-hmm. Then
there are the sort of negative implications, which is the fact that Netflix expanded very quickly to 110, 108, whatever the exact number is, international territories. And when they did that, a lot of traditional, let's just call it second window, whether that's home entertainment through pay cable, free cable, satellite, home video, was upended. And that upending took on different forms because other areas of the world are just not as saturated yet with Netflix or comfortable with Netflix. And there are certainly areas of the world that just don't have good enough internet connection to be as saturated with Netflix as we do. And so we started to see a lot of these buyers in these areas going out of business or having to merge or not being able to buy at the same level they did before, or having to buy only an action movie starring Sylvester Stallone for X amount. And that's all they could buy because that's the only thing they knew guaranteed could work. So we phrase it internally as the Netflix effect, continuing to push out traditional second window, again, in many forms, pay cable, TV, free cable, home entertainment. Then you have the reality of the Netflix originals, right? So now we're talking about the business model, direct to consumer, the business model being now applied to us as their model, then expanding and pushing out a lot of these traditional buyers, which has changed the way filmmakers can pre-sell content. It has changed the ways that financiers can bank certain content. Like the UK used to be one of the most important territories in the world. There's like 2 theatrical distributors left on that entire country. So that's a huge change. And then you've got the implications of Netflix originals, which is crazy. Crazy because it changed so much over the last 3 or 4 years, which was they came out big at places like Sundance and Cannes and Berlin, buying big, splashy titles. And then they said, you know what? Screw it. We don't need to acquire anything. Let's just sign overall deals with the Duplass's or sign an overall deal with Woody Allen and Amazon. And all of a sudden it became, okay, they're just financing all this content and producing it from an early stage. And that changed the landscape for distributors. You think about someone like A24. A24 has had to be reactionary and build that business in a climate when third-party acquisition of titles isn't the way it was when Harvey Weinstein was around, getting to go out and acquire unbelievably independently made movies that he might have had nothing to do in the development phase. A24 has to be heavily involved. And when we talked to them last week, they're going to do, I think, somewhere between 15 to 16 films. 8 to 10 of them are going to be internally developed from script stage through theatrical release. So you've got to be able and willing to, again, take a very long view because you can't wait, because Netflix is doing the same thing. They're corralling it from the script stage. And maybe even earlier, right? Jordan Peele signing an overall deal, a first look deal with Amazon. You have to be willing and able now to operate in that landscape. So what are the implications? The implications are smaller distributors getting less optionality or having to pay higher dollars for big splashy titles. And then it still needs to work. You think about Neon, awesome, really cool, but they come out and they spend $10 million on Assassination Nation and the movie makes like $1.5 million. You have to imagine some of that was driven by a belief that Netflix was going to try and scoop it up or A24 was going to scoop it up. And so now you're sidestepping landmines in a completely new way that you didn't have to 2 years ago at Sundance or 2 years ago at Cannes. So I think Netflix is changing the business. Obviously, I think I'm not saying anything revolutionary. they're changing the business at every single turn, and they're unbelievable. I mean, we've done Netflix original productions with them at Buffalo 8, and it's incredible. It is, and again, in my opinion, it is absolutely the future of how a sustainable middle market independent film and television company will live and thrive, is by doing a deal with Netflix. And some of my closest friends in this business have said, we're doing everything we can to just sign a 4-picture a year deal, and that will be our entire business. Netflix will finance all of them. We'll build producer fees into that structure. We'll build our company overhead into that structure, and we're just producing content direct for Netflix. And those are some of the best and brightest and strongest companies in the entertainment business, basically turning their back on traditional theatrical and saying, it's not the future. Future's Netflix.
I mean, I just saw this Christmas, that Kurt Russell movie, the Christmas movie.
Yeah.
That was directed by Chris Columbus. And I saw that and I was like, easily could have been released theatrically.
Correct.
Easily would have made hundreds of millions of dollars. Easily, but yet it was on Netflix. And I was just like, wow, that's a moment, like, because they make so many originals, it's like, it's hard to keep track. But that was a big budget original,
That was a big one.
That was a big one. And I'm sure they did insane amounts with that film.
I'm sure.
And what do you think about Apple and all the other big players that might be coming into this space? How do you think? Because Netflix has been the big boy for a while, but Disney and then if Apple decides to throw its weight around because it's got more money than anybody, if they want to, how do you think that's going to affect this landscape and your business in general?
I think it's good for our business because a lot of that product will still need to be financed. And a lot of the banks are already at their lending thresholds for Netflix and for Amazon. And so they actually tap us and say, hey, you guys want to look at this because we're at our threshold, which is great. I think why Netflix is so good compared to everyone else throwing their hat in the ring is that they've identified the fact that their brand is many things to many people, whereas Apple is trying to be brand consistent. Hulu has tried to figure itself out as it's changed hands corporate ownership wise. YouTube Red is built for, we've gone in and pitched content to them and they say, oh, this is good, but do you have anything with Selena Gomez? And they're dead serious, right? They know what the audience is. And so you think about Netflix can be that, right? It can release Taylor Swift's Reputation concert piece
and Roma. And then Roma.
Correct. And Roma in the same span. So to me, Netflix is, again, they have by far the biggest moat built around their business. But what do I think about? Obviously,
Disney's the big one.
Disney's big, and Apple's definitely big. But Apple's also very measured, right? They're not going to come out and try and do what Netflix has done by launching. What's the crazy stat? I mean, the film stat's kind of upsetting, which is they're only doing 44 Netflix original between there's 2 departments at Netflix in terms of the original film team. There's the Ian Brick and Matt Bromley team, which is doing sub $15 million movies. They're only making 44 movies this year. And then there's just the Scott Spur team, which is doing it's called Netflix Studio, and they're doing the $40 million to $100 million movies, and they're on track to do about 15. So total, they're not even doing 60 movies, right? And then you've got the TV side, and they're going to make 700 pieces of original television, whether that's contained miniseries, doc series, contained format, long format, and season 2s, etc. So TV is obviously a huge focus for them. And I think the stat that came out of the quarterly earnings call last year was 75% of content that people are watching on Netflix is television. So for every 10 hours, you have 7.5 of it you spend watching television. So I think the big companies will have an impact. Certainly there's an impact on Disney when a lot of these people have finally recognized, let's rip our content off of Netflix and not give them the keys to our car without charging them a price.
But they've already changed their business model. They've already adjusted. They're like, okay, take Disney, say goodbye, do what you want to do. We've got 700 original pieces here, and we have one of the most valuable libraries in the planet.
Correct.
And we did it in less than a decade.
Correct.
It's insane. It's absolutely insane.
Totally insane.
Insane what they've done. But I think you're right. I think it is something that a tech company would have done, because traditional Hollywood, they would have just never thought of it like
couldn't
this.
have seen it.
They could not have seen it. So now I want to ask you a few questions I ask all of my guests. What advice would you give a filmmaker wanting to break into the business today?
Network like crazy. Lean on relationships like crazy, in the sense of alumni networks or family friends, anyone that can get you a window into sitting down for a lunch, a meeting, picking someone's brain. There's also great resources. Understand and read the books and the history of this business. And then again, I think there's it was a rule of the early days of CAA, and we applied it and made it a rule here as we were building, which was someone on the team has to be at a event every single day, whether that event is a lunch or a dinner, or it's an opening, a screening, a premiere, or an investor conference, or whatever. Someone has to be continually building their personal brand or a business's brand every single day for years. And we were doing that 5, 6, 7 years, where you're attending something, what seemed like just a revolving door of events, but that becomes, like you've mentioned, it becomes a Rolodex, and a really, really strong Rolodex. So I'd say break in by leaning on people that can help you gain access to the business.
Can you tell me what book had the biggest impact on your life or career?
I mean, I'll be like a cheesy teenager and say that early days, it's something like Catcher in the Rye.
Of course.
Just being a high school kid. But then in terms of entertainment business, things like Easy Rider, Raging Bull, Rebels on the Back Lot. But I would say most recently, the biggest books are the CAA book, the Powerhouse. That book has been definitely, and I love that book.
What's the name of that book? What's the name of that book?
It's called Powerhouse.
Oh, that's going to be on my list. I didn't even know about that book. That's the CAA. I read Ovitz's bio back in the day, which was fascinating. Fascinating.
Yeah, it's excellent. Excellent.
And then also Spike, Mike, Slacker, and Dykes.
Yeah, very good.
That's another amazing, of the glorious 90s.
Glorious 90s.
The glorious 90s, which many filmmakers still live in, and they think that that's going to be.
Yes.
We're all waiting for that El Mariachi check from Colombia to come in. We're all waiting for that. I made a $7,000 movie too. I don't understand why I didn't get the deal that Robert did. What's wrong?
Right.
Now, what is the lesson that took you the longest to learn, whether in the film business or in life?
Oof.
These are heavy, like Oprah style questions. I apologize.
Yeah, it's okay. I would say that to me is probably about. Yeah, I'm sure you can recognize. I built these businesses, very, very, very aggressively. Building up to the sort of track record we have in the time span that we've done it in has required sort of pedal to the metal from day one. I would say this year, I'm definitely, and I would say I probably learned it towards the latter part of last year, being more reflective before being so reactionary. Whereas when we were building, it was, you have to be reactionary all the time. That's just the pace at which you're moving and growing. So it's now being more reflective, whether that's in dealing with a growing team here or the projects we're working on. But it at the end of the day, it's about sort of taking a deep breath and sort of the cheesy thing of counting to 10 before whether it's responding to an email or dealing with a situation with a team member or an investor, or as the portfolio got bigger and bigger and bigger, so too does the stress. And you've got to be able to sort of say, hey, sit back from it all and content's not anymore. And it's ultimately people. And if you can deal with people well, usually being more restrained, as I've gotten into my 30s now, trying to be more restrained, it's definitely the thing that took me the longest. And I was not willing, or definitely not wanting to be that person in my 20s. I wanted to be an absolute maniac.
As you should be in your 20s.
Correct.
Now, the toughest question of all, 3 of your favorite films of all time.
I'm probably going to go and use it very similarly to the book question in terms of those that made the biggest impact, and I'll go in order. I think the earliest big film for me is probably something like Apocalypse Now, mainly because I remember being like 12 years old, maybe even younger, and Francis Ford Coppola's or that 60s and 70s style filmmaking was the first introduction I had through my parents to really high level quality content that clearly was not made in sort of the traditional way. So I'd say that was huge. I wouldn't even necessarily call it a favorite. I would call it one of the biggest life-changing movies. The second would be, I was a freshman at a boarding school in Connecticut, and I had an unbelievably awesome English teacher who had just gotten out of college, and he had tremendous taste. And the films that he introduced me to, still to this day, I mean, I saw Rushmore when I was 13 years old, and I've been a lifelong Wes Anderson obsessive ever since.
Yes.
So that was huge. Definitely changed my life in a major way. And that was one of the first movies where I remember saying to that teacher at that time, like, I need to understand how this movie got made. Like, who financed this? How does this get made?
How does that work? What kind of pitch?
How did this happen?
What is this pitch? How do you pitch a film like
Correct.
Rushmore?
Correct. So I'd say Rushmore is probably my second, and then I would say that teacher definitely. I won't necessarily reference him. He turned me on to. I guess I was awkward by then. A lot of European film. So getting into obviously really training wheel European film, but Amelie and A Very Long Engagement and sort of the Jean-Pierre Jeunet filmmaking. Mm-hmm. And then that got me into European film. And I'd say that the film that definitely, as I got older, Ingmar Bergman became like, especially in college when I was studying film philosophy and film history, Scenes from a Marriage totally changed my life. And just how talented you are as a filmmaker if basically all you have is a room, a camera, and 2 actors and like 4 lights, and you're making a movie that is arguably one of the most powerful pieces of content ever. That was mind blowing, and I mean, I could go on, but I would say those 3 are probably the sort of. And look, I mean, then I got really into, even around that time, into sort of the Spielbergian history of it all.
Of course,
obsessed with Spielberg.
Who wasn't? Who wasn't?
And if you're not, you're crazy.
I mean, come on. And look, you can watch Jaws right now. That movie was made in 76.
Forever.
Or 75, 76. And it still holds. And not a lot of films in the 70s. There's only, Scorsese stuff, Spielberg, Coppola. There's a handful of movies that hold. And that's one of them,
Agreed.
Yeah. And watch Raiders of the Lost Ark today.
It's amazing.
Still good. The effect's still good. Now, this last question I'm going to ask you, please be careful how you answer it. Where do you want people to find you, and how do they want you to find them? Like, how do you want people to, where can people find more about what you do, but do not give them personal information? I promise you won't be inundated.
Yes. So the BondIt website at www.bondit.us. Mm-hmm. And there's a application form there if someone wanted to reach out with a specific project. It's just info@bondit.us. Mm-hmm. And then the Buffalo 8 website, buffalo8.com, mm-hmm. abspayroll.com. And we're all over social media, as I think everyone our age is. Mm-hmm. So certainly on Instagram, probably most active, but Facebook and Twitter as well.
Matthew, thank you so much, man. It has been an actually eye-opening conversation with you. You've dropped an insane amount of knowledge bombs on the tribe today, and hopefully we've helped a few people along the way today not to make some mistakes.
Very good.
Thanks, man.
Very good. Of course.